Larry Fink, in his letter, which you can read on the internet, he said, I believe the decarbonising of the global economy is going to create the greatest investment opportunity of our lifetime. It will also leave behind the companies that don't adapt, regardless of what industry they are in. And I think Larry Fink is spot on. Last year, I presented building a green metals business. Today, what we wanted to share with you in more detail was our road to carbon neutrality. We've made good progress since we made the commitments earlier last year to get to carbon neutrality by 2040. We certainly do believe we can do that much earlier. Building a green metals portfolio, and that's based on building a climate change resilient business. We did 4 transactions in 2021, Keliber, Sandouville, the Rhyolite Ridge project, and the acquisition of a stake in New Century. The battery metals, together with the PGMs, will provide a very significant green metals portfolio. We do intend to complement that with other metals such as copper, maybe manganese. Uranium is a byproduct of gold, and we are working on our uranium strategy. We have advanced our thinking in recycling, and of course tailings retreatment is another area that is similar to recycling, but we do and we are increasing our exposure in the circular economy.
Sibanye-Stillwater believes climate change to be the most pressing threat to our planet and global challenge of our time, as recognized by the Paris Agreement and the UN Sustainable Development Goals. As a force for good, Sibanye-Stillwater has a role to play in the urgent global response to the threat of climate change, and as such, we have aligned our governance, strategy, risk management, and targets across the group to align with the recommendations of the TCFD. First and foremost, we produce green metals, as Neil's indicated, that support in the reduction of greenhouse gases and the reversal of climate change. In 2021, we committed to achieving carbon neutrality by 2040 in advance of the requirements of climate science. Over the last year, we have refined our pathway and supporting interventions and have grown the confidence in our ability to deliver on this commitment. In the graph depicted here, we have forecasted our greenhouse gas emissions profile over the life of our mines based on a bottom-up analysis of their production profiles and energy requirements. In terms of business as usual, we expect a short-term increase in emissions through production growth, followed by a decline from 2025 through life of mine closures and grid decarbonisation. If we overlay a science-based pathway, we're able to understand the operational decarbonisation required to contribute to limiting global warming to 1.5 degrees Celsius and adhere to science-based targets, which we plan to update in 2022, including Marikana and Scope 3. Through the introduction of demand-side energy management, renewable energy, electrification, and fuel switching opportunities, including hydrogen, we are able to demonstrate an active decarbonisation pathway. This pathway will be converted to internal annual carbon budgets prescribed at a group and segment level to inform our long-term incentive planning. Recognizing that there will be remnants hard to abate emissions towards the end of our carbon neutral journey, we have compiled a carbon offset strategy that will generate the required offsets to neutralize the remaining emissions. Combined, these elements present a definitive pathway through to carbon neutrality, supported by internal carbon budgets to drive group decarbonisation and deliver on our commitments. Due to the infrastructure and extensive energy requirements of our South African operations, combined with the carbon-intensive electricity supply from Eskom, 93% of our group greenhouse gas emissions emanate from grid-supplied electricity. Eskom also continues to pose risk to our business through above-inflation tariff increases and unreliable electricity supply. The extensive electrification of our operations, however, presents an opportunity to mitigate these risks and accelerate decarbonisation through the deployment of renewable energy. Relaxing of regulatory requirements and anticipated ability to trade electricity in South Africa has allowed us to grow our portfolio of renewable projects to 557 megawatts, including solar and wind projects. We have appointed a local project developer for our SA Gold 50 megawatt solar PV project and 2 local project developers for 3 shovel wind projects across South Africa. Steady progress is also being made in the permits and consents required for our SA PGM solar project. These projects have been structured to limit capital outlay whilst enabling significant decarbonisation and savings benefits. The total anticipated capital cost of the project is anticipated to be around 11 billion rand and will be funded by third parties through power purchase agreements. The project will enable 25% reduction in Scope 2 emissions by 2025 and deliver substantial operational benefits. We plan to also leverage these projects to promote local socio-economic development through our Infrastructure for Impact program. The project will also contribute in closing of the South African electricity supply deficit and bring an end to load shedding to the benefit of all South Africans and the economy.